Welcome to Signal Stock. Today we're breaking down 5 stocks that triggered our weekly scan, and this week the board splits into 2 clean stories. 2 of them are enterprise software companies that beat earnings, raised guidance, and got sold off anyway, for the second quarter in a row. 2 of them are AI infrastructure plays where the market spent the week rediscovering fundamentals that were already sitting there in plain sight. And one of them is a small modular reactor stock catching a sector-wide sentiment wave for the second time in 8 weeks, without a single new fact behind it. Before we get into this week's names, let's look at how last week's calls actually played out. Every one of last week's 7 forecasts, IBM, NuScale, Oklo, Micron, Intel, Oracle, and AMD, landed inside its full bear to bull range. That's a perfect week, and it pushes our running total to 27 out of 34 forecasts within range, with every single one of the 34 still directionally correct. Let's start with the stock that had the wildest month of anyone on this list. Micron went from an all-time high, to a bear market, to a 16.6% week, all inside about 4 weeks. Here's the thing. Nothing about the underlying business actually changed in that stretch. The high-bandwidth memory story, sold out for all of 2026, never broke. What broke was the multiple, on pure AI bubble fear. This week, that fear partially unwound, helped along by bigger capex numbers out of Google and Tesla, and a supply shortage call from TrendForce. Our take: hold for a pullback entry in the short term, but buy for the medium and long term. The structural story is intact. The risk to flag is real, though. A 30% round trip in a single month means this name can absolutely whipsaw again before it settles. Next, a name we've flagged before. NuScale Power jumped over 15% this week on a wave of nuclear for AI sentiment, a White House push to accelerate reactor build-outs, and a report on a US-Saudi civil nuclear framework. Here's the catch. NuScale wasn't even the company named in either headline. This is sector halo, not a company-specific catalyst, and it's the second time in 8 weeks this exact setup has shown up on our board. Our take: hold, across every time horizon. The regulatory head start is real. NuScale is still the only NRC-certified small modular reactor design in the country. But first commercial revenue isn't expected until 2030. The company has diluted shareholders by 17% this year funding its cash burn. And this is now a repeat trigger the market has already tested and let fade twice before. Now for the story we think is actually the most interesting one this week. And it connects 2 completely different companies. ServiceNow beat its quarter. Adobe beat its quarter too. Record revenue, raised guidance, the whole beat and raise package. And investors sold both of them anyway, double digits, in the same week. The trigger traces back to IBM's earnings call, where management said clients are shifting budget away from software and toward AI hardware. That comment rippled through the entire enterprise software sector, and ServiceNow and Adobe both got caught in it. Here's the pattern that matters, though. This is the second consecutive quarter both of these companies have beaten and been sold off anyway. ServiceNow dropped double digits after an April beat too. Adobe hit a 52-week low in June after its own beat. When the market rejects the same good news twice, that's not noise anymore, that's a verdict. Our take on ServiceNow: hold, across all horizons. Subscription revenue is still growing over 20%, but weaker guidance for the back half of the year gave the AI fear story a fresh, concrete data point. We need a new fact here, not just another earnings beat, before this changes. Our take on Adobe: also hold, but pay attention to the valuation. This stock is trading under 10 times forward earnings for a business still growing revenue in the double digits with 45% operating margins. That's genuinely cheap. But with the CEO moving to chair, the CFO gone to a competitor, and no successor named yet, we want a new fact, a named leader, or real proof the freemium pivot converts, before stepping in. Last stock on the board: NRG Energy, up almost 11% this week on the same AI power demand theme that's been lifting the whole sector. NRG's case is more concrete than most of the sector rally around it. The company closed its LS Power acquisition, doubling its generation fleet, and has real contracted data center capacity on the books. But here's the wrinkle worth flagging on screen. Even as the price popped this week, Momentum indicators were both reading sell. Price and momentum don't agree with each other right now. Our take: hold in the short term until that technical picture confirms, but buy for the medium and long term on the strength of the actual contracted growth. We'd rather see the momentum catch up to the story before sizing up. That's the board this week. 2 AI infrastructure names where sentiment is catching up to fundamentals that were already there. 2 enterprise software names getting punished for the second straight quarter on the same AI disruption fear. And 1 repeat trigger name riding a wave it hasn't specifically earned. Full price targets for all 5 stocks are on screen now, along with our complete Apex Prime breakdown in the video description. New breakdown every Friday. See you next week.